Hello, everyone. Good morning from this part of the world, and depending on what time zone you are tuning in from, I wish you a good afternoon and good evening. Welcome to our first edition of the Forex Morning Mastery for this new week. Trust you all had a wonderful weekend and, of course, pumped up and ready for the new week. Well, for those who are joining us for the first time, my own name is Sheriff Daramola, and I'm going to be your host for the next 40 to 1 hour, depending on how interactive or how long this session is going to be taking. So, to give you a quick brief, the Forex Morning Mastery is an educational avenue where we all come together 3 times in a week, that is Mondays, Wednesdays and Fridays, to have a deep understanding into the behavioral patterns of market participants in the choosing environment of the financial assets we are looking at. And during the course of the session, we usually strategize on how to position ourselves for the next move, understanding the behavioral patterns through the lens of price action and fundamental analysis. And in the subsequent days in the week, Monday, Wednesdays, and Fridays, we come here to review how well these assets have done and, of course, use that information to position for that particular day. So I'm so excited to have you join us here this morning, and feel free to engage in the comment section if you have any questions as regards to the asset we are looking at, or if you have any questions as regards to the financial market. Feel free to let me know in the comment section. So welcome once again. So with that said, here we will be diving right into the business, and today, as always, we are going to be monitoring 3 financial instruments for this week, and this includes the US All Spot, the GBPUSD. You see, I continue to take on the GBP. I think this is the third or fourth week consecutively that we have been trading the GBPUSD, and we've not done bad at all, as we made some significant profit last week, and I'm looking forward to add more to that in this week as we have some interesting setup evolving on the chart. Then finally, we are going to be taking on the gold commodity, that is the XAUUSD, where we are also looking at how we will be taking advantage of the strength of the gold commodity amidst these trade war tensions. So stay tuned in if you are a fan of any of these assets, as you do not want to miss out on the valuable ideas we will be deliberating on today. Now, before we kickstart the session, that is, before we run into the technical details, it's important that we also understand what is really going on in the market, especially around the US dollar, basically because the dollar cuts across all of the assets on our watch list, and whatever happens to the dollar is definitely going to influence our trading decisions around this chosen asset. Now, from the look of things, and even since the beginning of the year, the dollar had continued to drop significantly, and thanks to a lot of parameters behind the scenes, one of which is the dovish Fed outlook and high rate cut expectations thanks to soft US inflation data. So we saw last week how the CPI and PPI data all came in below market expectations, and of course, when inflation continues to drop, it boosts the expectations for aggressive Fed rate cuts, and traders now see multiple rate cuts on the horizon, which further devalues the US dollar at this point. Now, to make matter worse, the unusual spike in US yields suggests investors are offloading the US government bonds, and this lack of confidence in the bond performance is contributing to the dollar slide. Of course, we know how the US dollar and the US Treasury bond yield have a tight relationship. They are directly proportional. So if the Treasury bond yield is dropping, it is expected that the US dollar will also follow suit. Then, to cap it, the escalating trade tension is real and big. Heightened US-China trade war concerns are fueling recession fears. With global growth at risk, investors are shifting away from the US dollar and further pushing it lower. Now, will the dollar have enough room to rise this week? Will market participants see the US dollar as cheap enough to buy? That is what we are going to be looking at in this session. So we are going to be, how these factors I shared earlier is going to be shaping this week's session boils down to a couple of factors. We want to be monitoring Fed commentaries. We want to keep an eye on remark from Fed officials. As you can see on the economic calendar on your screen, we have a bunch of Fed officials speaking this week. Look at Monday alone, we have about 4 of them, 4 p.m. UTC, and of course 8 p.m. UTC. Then we also have another one around 11:40 p.m. UTC. Fast forward to Tuesday, we had Fed Cook, and then we have the Fed chairman who is going to be speaking on Wednesday. So we have a lot of Fed officials speaking this week, and this can, depending on what the narrative they put on the table, can quickly shift sentiment in favor or against the US dollar. So these are very, very important events we will be looking forward to. Then we also have upcoming US economic data, which most importantly for this week is the retail sales data. And we also have other other upcoming key US economic releases like the hold on a second, let's look at this together. We are looking at the retail sales. We've talked about that. We are looking at the industrial production that is coming up on Wednesday. Then we have the initial jobless claim count. That's a labor oriented data. Of course, we want to know how the labor sector is doing. Then which other one are we going to be looking at this week? I think we have the New York Empire State Manufacturing Index tomorrow by 12:30 p.m. UTC. So this is going to be giving us an insight into how well the manufacturing sector in the New York City is doing, and of course, this releases might offer clues on whether the dovish trend and the US dollar will continue. Then we also want to be preparing for volatility this week. Given the mix of factors, we want to expect some rapid price movement. Any unexpected data spike or trade update could temporarily reverse the US dollar's decline or probably continue to run to the downside. So what we are going to be doing today is to see how we can strategically position ourselves for whatever opportunity the market is bringing to us, and we shall be doing this using our price action and fundamental analysis. Now today, Monday, April 14th, we are looking at a bunch of events from both the United States and the United Kingdom economic docket. We talked about the Fed speeches, Fed official speeches coming up later in the evening today. Then we also have the BRC like-for-like retail sales data from the United Kingdom. Of course, the United Kingdom's economy has been very resilient. We saw the GDP rise last week. We saw good figures from the labor sector. We saw which other one was that? I can't remember, but all the data from the United Kingdom last week shows that the economy is recovering, and we're looking forward to the BRC like-for-like retail sales data coming up later today at 11 p.m. UTC. And of course, this data measures changes in the actual value of retail sales from participating companies with invaluable management information on a regular and reliable basis. So it will be giving us an insight into how well the retail sector in the United Kingdom is doing. Now, from the data we have here, economists and market participants are projecting a 0.5% expansion for the month of March, though this looks a little bit lower than the previous month, which came in at 0.9%. So we are going to be looking forward to see what the actual data is going to be like. Will it be just as market had expected, below expectations, or even beyond expectations? But it's important to note that theoretically, the better the figures, the better for the British pound. So with that said here, and I think we also have some other major events tomorrow. We have labor-oriented data from the United Kingdom. We have the average earning excluding bonus. We have the claimant count change. We have the employment change, and of course the ILO unemployment rate. So this is coming tomorrow morning, 6 a.m. UTC, and this will be giving us an insight into how well the labor sector in the United Kingdom is performing. If the figures comes in better, it will continue to support the upward trajectory of the British pound. So let's go right into the chart and see what is going on and how we will be capitalizing on the next move. So the first asset we are going to be looking at this morning is going to be the USOILSPOT, and of course I already have a buy position triggered on this asset, and I will be sharing with you in details what led to me buying this asset despite the dovish stance around the US crude oil prices. Now, before we go into the technical details, it's important for us to understand the nitty-gritty around this market. Presently, oil is caught between weak demand fears and geopolitical supply shocks. Now, if you are with me throughout last week, you'll understand that the crude oil is under serious pressure. Let's go to the higher time frame to see things clearly here. So the crude oil has been on a serious pressure from global growth risk and rising supply concerns. Now, the US dollar weakness has also the US dollar weakness and the Iran tensions may act as a cushion for this downtrend scenario, which we cannot ignore the potentials that buyers can come in this week, as the oil price is very, very cheap at this point in time, and majority of market participants may want to capitalize on the weakness of the US dollar. Remember, the crude oil commodity is a US dollar denominated asset, and if the value of the US dollar drops, crude oil will become cheap, or let me say, other currency holders will find the dollar cheap to convert their currency to, so that they can buy the crude oil. And if that happens, what happens? The demand will increase, and as demand increases, price is expected to rise. So I want to see this as a cushion to the downtrend we have been witnessing since the beginning of this month. And from what we saw here on the 4 hours time frame, you can see that buyers are beginning to gain some traction. We're going to be talking about the technical details very soon, but let's look at what is really driving this market. What has driven this market thus far? Now, we have the US-China trade war, which has intensified, and of course this is weighing on oil prices. So fear of slower growth is really high at this point, as weaker oil demand outlook is on the table. Then we also have the OPEC Plus production increase. We had a surprise last month where OPEC Plus were projecting a return of 411,000 barrels per day to the market in May. Now, what does this mean? This means oversupply in the market, which could risk rising faster than expected, causing prices to drop significantly. From simple economics, when supply rises, what happens to price? Price will drop because the commodity becomes surplus in the market, and of course they cannot be bought at high prices anymore. So for me, we want to see how we are going to be trading within this whole scenario. Now, in as much as the crude oil is looking very bearish at this point, it's still looking very bearish actually, considering what we are seeing here on the chart. If you look at the 4 hours time frame here, you will see that I do have a descending trend line after connecting some pivot points. So look at what I have here, a beautiful descending trend line to work with. So at the beginning of the month of April, price was trading above the descending trend line, as you can see here. But what happened in the first week of April, I think towards the end of the first week of April, we saw price break down the descending trend line, and since then, that is the last 2-3 weeks, price had continued to maintain bearish pressure below that structure, showing us signs that buyers have been finding it difficult to break out of that descending trend line. And not until this morning, we're beginning to see some signs of recovery as consolidation continues to linger around that trend line since this new week began. So the question now is whether or not this trend line will be broken to the upside, or maybe respected to push price to the downside. So for me, the positive drivers for the crude oil, I just talked about that, the weak US dollar and the Fed rate cut expectations is very high at this point, and it's pushing the dollar lower, and this could make oil cheaper for global buyers. Now, the potential US crackdown on Iranian oil export can also incite supply threats from Iran's stockpile. So this could also help oil prices to rise. So how do we intend to trade this market this week? So for me at this juncture, if I am going to be buying, I'm looking at a short-term bias as price action continued to trade within a range-bound structure since the week began, showing signs of prevailing uncertainty at this point. So while I was reviewing this current market structure, this is what I was able to come up with here on the 4 hours time frame to try and decipher the behavioral patterns of market participants and of course understand how market participants are digesting these fundamentals. Now, from the look of things here, I have my key level for this week at the $62.50 level, and look at how this key level had played a significant role since the beginning of this month. So throughout this month, price action hasn't been able to break out of this key level, showing further confirming the strength of the sellers in this market. Look at what happened here at the beginning of the month. We saw a shooting star candle here during the second week of the month, and last week we saw how it became difficult for buyers to break through that particular area. So I want to use this key level, this level here, as my key level for the week. So if price can break out of this key level finally this week, it will be a beautiful confirmation that we are good to continue buying the US crude oil. Then the lowest point price action has been in a long time, I think in about 2 or 3 years now, is the $56 area. And look at what happened as soon as price got here. Market deemed it cheap enough to buy, and this resulted in this engulfing bullish candle. Now, with this bullish candle here, I'm beginning to suspect that this could be a platform for buyers to continue the momentum. And then if you go ahead to look at it from an holistic standpoint, that is considering the impulsive leg that brought us to this point, you'll begin to notice the evolution of price action into what looks like an inverse head and shoulder pattern, which technically is considered to be a strong reversal setup, where the neckline of this reversal setup lines up with that key level at the $62.50 area. And of course, when we have such structures like this, we want to see price breakout, retest the neckline to confirm that buyers are now in the game. So from all ramifications, it appears that buyers, there is a recovery process ongoing in the US crude oil market. So how do we intend to buy? Where is most appropriate to buy or sell in this market? So for this week, this trend line is going to be playing a significant role. If price trades below the descending trend line, we look out for selling ideas. But if price can successfully break out, retest this trend line, then we want to start considering buying with the hopes of adding more at the breakout of the key level and the neckline of that potential reversal pattern. So now let's scale down into our execution time frame, that is the 1 hour time frame, to see how market participants have reacting to this descending trend line. So if we scale down into the 1 hour time frame, we begin to see things more clearly. And as you can see here, price has been confined within a range bound structure since the week began. Though the week started on a strong bearish note, as you can see, we had a shooting star candle here, which is a sign that sellers are getting stronger. So we have the resistance line. This was the highest point price action has gotten to for this week. That is the $61.60 level, and the lowest point price has gotten to this week is the $60.59 area. So you can see we have a range bound structure already, and of of course, whenever we have this kind of structure, you know how we do it. We exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, theoretically, we expect a breakout of structure before buying, right? But I already bought earlier, and the reason why I bought the US crude oil was out of the fact that the US is cracking down on Iranian oil exports, which could increase oil prices due to supply concerns. And then we also have the Fed rate cut expectation, which has been pushing the US dollar lower, making oil cheaper for global buyers. Now, this for me could increase the demand for crude oil as investors take advantage of the cheap US dollar to buy the US crude oil. So based on this fact, I'm beginning to suspect that price may likely rise. And to further support these fundamentals is the reversal setup we identified on the 4 hours time frame. So after noticing continuous buy pressure around this area, showing signs that sellers are finding it difficult to break through, and this is evident with multiple hammer candles around this area, so I decided to buy the break of the $60.92 level. So at this point, I currently have about 32 pips in profit on the US oil spot. So I would want to move my stop losses right now to secure some profits, or let me just move it to break even at this juncture while I continue to monitor price action if price will go ahead and break out of that resistance line. Now, for those of you who are yet to enter this trade, well, let's see if the price will come back into the $60.92 level. Continue buy pressure here again will welcome buying ideas. Now, if that does not happen, then we are looking forward to the breakout retest of the $61.60 level to maximize the upward trajectory. So what I will be doing right now is to place a buy stop order above the resistance line to maximize the uptrend scenario. Since I already have a buy position running, so I can afford to risk something above the $61.60 level to capitalize on the upward trajectory. So that is what I'm looking at to buy the US crude oil, at least for the first half of the week. Now, in as much as I'm in a buy position right now, that doesn't necessarily mean that sellers cannot come into play. Remember, we talked about the US-China trade war situation. We also talked about the surprise of OPEC Plus to increase production at the beginning of next month. And this, of course, could still exert selling pressure on oil prices. And if we look at things from a long-term perspective, the momentum is bearish. And of course, based on this, we cannot ignore the potentials that sellers can also come into play. Now, if they do come into play, what are the chances they have, and where will be more suitable for us to join the bearish move? Now, from the range bound structure we have here, it is quite simple. We want to see price break down the support line of this range bound structure to confirm selling ideas. Now, I would want to see a breakdown retest happen maybe on the 5, 10, or 15 minutes time frame. So I want to see something like this happen, breakdown, taking out all the buy position along the $60.59 area, price coming back to retest structure, gathering some liquidity to continue the downtrend move. So this will be the only condition that will make me start considering selling the US crude oil. So it's a simple setup we have here on the US crude oil. We have a range bound structure. Let's see how the market plays out. I already have a buy position. Told you earlier, I moved my stop losses to break even with the hopes the price will break out of the resistance line at the $61.60 level. But if it happens that we get taken out, we're ready for sell at the breakdown of the $60.59 $1.59 level. So there you have it, my in-depth look at the XAUUSD for today. I do hope I made myself very clear, but if you have any questions whatsoever, feel free to let me know in the comment section. So I'll take the next 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right, so in the absence of no questions, I want to assume that we are all on the same page. And in that regard, we shall be moving on to the next asset. Ensure you mark out the structures accordingly on your chart, as we are going to be using it to help navigate this market today. So depending on how the market reacts to the structure will determine if we will maintain this upward trajectory or get ready to sell. The breakdown retest of the $60.59 level. So I wish us all the best of luck on the USOILSPOT. So moving on to the next asset on our watch list. So the next asset we are looking at is the GBPUSD, that is the British pounds against the US dollar. And of course, at the moment, the GBP is riding the US dollar weakness, but needs UK data to prove its strength. So we are going to be trading with a trend today and for the first half of the week, but respect the calendar as well, as we have some big catalysts coming ahead. Last week we did very well on the GBP USD, as we were able to scoop in approximately 300 pips on that single move that hit that high at the 1.3200 level last week, before that massive move to the downside. And from all ramification, the drivers currently support the pound sterling. We have a weakening US dollar, which was as a result of the escalating US-China trade war, and fears of a recession have continued to slam the US dollar at this point. And currently, the US dollar is at its lowest point since 2022, and of course this has continued to support the upward trajectory. Then we also have soft inflation figures from the United States. We saw last week the CPI fell a deficit of 0.1% in March, and we saw how the core CPI was below market expectation, and market now expects about 90 basis points of Fed rate cuts this year, making the US dollar less attractive. Then in terms of interest rate cuts, there is no signs of aggressive interest rate cuts by the Bank of England. So unlike the Fed, traders see fewer chances of a rate cut in May from the Bank of England, and this keeps the pound sterling relatively more supported. And another factor here that will continue to exert pressure on the US dollar is the equity market, which is currently staying stable at the moment. Risk appetite is improving, and this continues to boost the pound sterling over the US dollar. So for me at this juncture, and based on these factors, the path of least resistance for the pound sterling remains to the upside. However, in as much as this is the case, we need to be very cautious ahead of the UK data. So I still think that traders may want to be holding back a little bit ahead of the UK jobs and inflation report this week. And like I told you earlier, on Tuesday, we are looking at the claimant count change, the employment change, and the ILO unemployment rate all coming up very early tomorrow. And these are very, very significant events telling us, or let me say, giving us an insight into how well the labor sector in the United Kingdom is doing. Now, if this data comes in higher than expected or positive, we are likely going to see the pound sterling continue the rise. Then I think we also have the consumer price index coming up on Wednesday as well. That's an inflationary data. We have the producer price index as well coming up on Wednesday from the United Kingdom, all of which are going to be playing a significant role. So as a result of this, we may see some capping in this upward trajectory, as major key players will not be willing to place aggressive bets, as they would like to wait for this data to come in before maybe adding more positions to the existing trade. So we need to be very careful around this bullish move. So without any fresh bullish UK data, the GP upside could stall temporarily, which is something we're also going to be taking into account. So how do we intend to trade the GBPUSD based on these factors we have seen here? So like I said, a strong UK job report or CPI data or PPI data on Wednesday could fuel for upside, but we want to be ready to pivot as well if the speech from the Fed chairman or the US retail sales surprises the market, and it could snap the GBPUSD momentum to the downside. So we are going to be taking these two factors into account while we look at the technical structure to understand how market participants are thinking at this point. So my first point of contact to help me understand the sentiment in the market is the daily time frame. And right here on the daily time frame, what I did was to take into account the character of price action since November of last year. And what I was able to come up with here, the first thing I noticed is this key level, which is at the 1.28700 area. And if you look closely into this area, you will see how this level had played a significant role in determining the direction of price action. So back in November last year, we saw how this level was at a point a demand zone, though it didn't last long before we saw price break down that structure, and for about 3 to 4 months price maintained momentum below the structure, and not until the beginning of March we saw price break out of that level, and since then this area had been a strong support zone, as you can see here. Though we had a little bit of breakdown here on last week Tuesday, I think, which later turned out to be a false breakdown, and you can see right on Thursday last week we saw price climb back above that structure to emphasize the strength of the buyers at this point. So for me, that is my key level going forward, and as long as price remains above that structure, we are going to be maintaining a bullish bias. Now secondly, I zoomed in to see how market participants have been behaving since the beginning of this year. And if you look at this, the pound sterling had continued to gain traction. Of course, we can see we have some uniform and steady higher lows here, giving us this beautiful ascending trend line to work with. And one interesting thing about this ascending trend line is how beautifully it shares a confluence with that key level at the 1.287. And you know how we use our ascending trend lines. As long as price remains above this ascending trend line, we will be looking out for patterns and structures that support buying ideas. So this was what I was able to come up with here on the daily time frame. And then when I scaled down into the 4 hours time frame, I was able to see a descending channel. So let's look at it together here. So we have the key level here, right? 1.287, very much intact. Then I have this trend line here, as you can see, which turns out to be the support line of the descending channel. Then we have the resistant line of that descending channel here. So we saw price, it's the yearly high. This is the highest point price action has gotten to for this year. And then we saw the second attempt to break out fail here on Friday, as we saw price drop to the downside, resulting into this range bound structure ahead of this week. And with this range bound structure, I shared this structure with some of us during the forex market prep yesterday. So I was saying here that I will be buying the breakout of the resistant line, which interestingly shares a confluence with the resistant line of that descending channel, which is exactly what happened here. But unfortunately, I missed out on this position, as this whole situation happened very, very early this morning, and by the time I came to the chart, it had already moved on. So what I'm going to be doing, I already have a buy anywhere. I took it based on the structure I saw on the 1 hour time frame, but I will be sharing with you how we can actually look at this from a long-term perspective. So from a long-term perspective, I'm not going to be ignoring the possibility that price could come back, retest the structure to continue that uptrend move, and this will be subject to what happens tomorrow from the UK labor oriented data. So let's scale down into the 1 hour time frame, that is our execution time frame, and this was what I was able to come up with. Now the first thing first here is an ascending trend line, so capturing the character of price action in the last 3 to 4 days shows the momentum is strong, as you can see here, and the fact that price remains above the trend line is a beautiful signal that we are maintaining a bullish bias. Then secondly, zooming into the structure, we saw that the first 6 to 7 hours of the new week, price was consolidating, confined within the 1.31040 and the 1.30640 level to emphasize the prevailing uncertainty in the market. And with this situation here, you know how we treat our range bound structure. We want to wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And look at what we have. Price did break out of the structure during the Asian session, so I missed out on that one, and I captured this consolidation here. For those who captured this move, well done. Kudos to you guys. If you took it right from the breakout of the resistance line, you want to be moving your stop losses right now to secure the current buy position. But if you are yet to capitalize on this move, then I would encourage you to exercise patience and wait for price to come back and retest structure before continuing the trajectory. And what structures are we going to be looking at? So we have two structures to work with here. The first one is the ascending trend line. So we want to see price come back into this trend line. So to give a visual representation of what I'm talking about here, so I want to see something like this. Price comes into the trend line, and we want to see signs that sellers are finding it difficult to break through the trend line, and this can reflect on the chart as continued buy pressure above the structure. Then it will be good to continue the buy. Jumping into a position there is looking very reasonable, and of course have your stop loss. Give enough room here, maybe below the 1.3104. That's about 45 to 50 pips of stop loss, and of course giving enough breathing space for price action to move around. Now, the other scenario here is if price drops below the trend line, then we are looking at price coming back to retest the structure. So the structure here that was broken out this morning here to incite that uptrend move. So those are the two scenarios I'm going to be looking at today. It's either going to come back and retest the trend line or the 1.31040 area before we can now continue the uptrend move. Now, it is not all the time price comes back to retest structure, especially if the fundamental is supporting that asset. And in this case scenario, the fundamental is strongly in favor of the British pounds, thanks to a weaker US dollar at this juncture, softer US inflation data, then less aggressive Bank of England cut expectations, and stable market sentiment around the equity market. So all of this for me are very, very good signal for the GBP at this point. So just in case price does not come back and retest structure and it continues to rise, then we want to see price break out of the resistant line here at the 1.32100 area. So let's go back to the 4 hours time frame to see how important that level is. Is it the 4 hours time frame or the daily time frame? Okay, yeah, the daily time frame. So that's the highest point price action has been this year. So if price can break out of that highest point, I want to believe that the pounds will just continue to go to the upside. So that is another area we're looking at to maximize the uptrend if price ever breaks out of that structure. So there you have it, my in-depth look into how to buy the GBPUSD. Now, I know some of us will be considering selling, maybe as a result of the fact that the dollar might be seen very cheap enough to buy by investors at this point in time. And of course, the fact that traders are holding back ahead of the UK job and inflation report could also cap this upward trajectory. Now, in that regard, I will not be willing to jump into a sell except I see a significant confirmation. Initially, when price was within this range bound structure, I was hoping to sell if price will break down, retest the structure. But with the way things are going right now, price is far away from that support line. So if anything strange happens, maybe the dollar gains traction surprisingly, I will definitely be updating us with new structures on my Telegram platform. But in the meantime, the path of least resistance for the GBP remains to the upside. So I do hope I made some justice to this analysis. However, if you need some clarifications, feel free to let me know in the comment section. So I'll take about 5-10 seconds off. Let's see if there are any questions whatsoever before we move on to the final asset on our watch list for today. Stay tuned in. All right. So if you have questions, please feel free to let me know. No question is too much or too small. Anything on your mind, feel free to let me know. It gets us to understand the structure much more better. But since there are no questions, I want to assume that we are all on the same page, right? Please, let's mark out the structure accordingly on our chart, as we are going to be using it to navigate this market. This trend line here is very, very important. It's going to be playing a significant role. And then the range bound structure too as well is very important. So let's make sure we mark them out. We are going to be using them to navigate the market. And for those of us who had already joined that bullish move at the break of the 1.31, please move your stop losses right now, secure some profit while we monitor price action around this particular zone. So I wish us all the best of luck on the GBPUSD. So permit me moving on to the final asset on our watch list for this week. Stay tuned in. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And of course, we saw the gold hit another record high last week at the 3,245 level, and in fact we are within uncharted territory, and it is important to understand the psychological expectations around uncharted territory. Usually when price hits a record high like this, there is this sense of fear that comes into the market, where those who had capitalized on that strong move may want to start taking some profit off the chart out of fear that price may crash from this area. Of course, we know price has never been here before, and due to that, instability is definitely expected. So we may likely see some choppy market conditions, retracement moves, or even consolidation phases around this particular area. So we shouldn't be surprised about this whole situation. And it is important for us to also be very, very careful in our decision making around this sensitive uncharted area. Now, at the moment, gold is on strong footing thanks to the weakness in the US dollar, rate cut bet expectations, and of course geopolitical stress. Now, unless the Fed pushes back hard on rate cut expectations, gold is likely going to break higher this week. Now, I will not be going into the higher time frame. I think we discussed this in detail in my weekend video on the XAUUSD. For those of you who are yet to watch it, please go ahead and watch that video to have a better understanding into what is really going on in this market. Now, this morning I updated us with a new structure after trying to understand the behavioral patterns of market participants since the new week has begun. Now, first of all, let's talk about the fundamental drivers that has been supporting the upward trajectory of gold. Now, the escalating US-China trade war. Last week, we learned that China also hiked tariff to 125%. As US also hikes their own to 145%, leading to global uncertainty. And this, of course, will safe haven demand for gold as majority start pulling their capital out of the US dollar and equity market to buy the gold, which is known to be a conventional safe haven asset. Now, besides this also has weakened the US dollar as well. US dollar is currently sitting at its lowest point since 2022 as traders bet on aggressive Fed rate cuts. Now, this is obviously bullish for the gold commodity, and the path of least resistance remains to the upside. And to make matter worse for the US dollar, we saw the CPI data and the PPI data last week coming in lower than what market had expected. Then the US Treasury bond yield is dropping significantly, signaling loss of confidence in the US economy. And of course, the money is shifting into the gold market at this point. Now, with the way things are going, based on the structure we're seeing on the chart, you will see that since the week began, there is a little bit of uncertainty in this market. Now, the market has been confined within the 3,239 and the 3,210 in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 30 now. Let's say 12 hours, 30 minutes, because this candle still has about 27 minutes to close. So price has been confined within this range bound structure since the beginning of the week. And of course, when we see range bound structure like this, it's a sign that there is an indecision in the market as buyers and sellers are trapped in a tug of war. Who is going to win this? Well, from a fundamental perspective, the chances that buyers will break out of the resistant line of this range bound structure is quite higher. However, if we consider risk sentiment rebounding slightly, so what I mean here is that there is a mild recovery in global equity, causing some gold buyers to pause the upward move as short-term consolidation is likely going to be underway. And as a result of this, we've seen how sellers has been trying to take the lead from this market, pushing price a little bit to the downside. So how do we intend to trade the gold commodity this week? For me, I will maintain a bullish bias, and of course we want to be looking at things from a short-term bias. So bullish with cautious momentum is what I'm going to be looking at. So the best setup here is to continue to look out for buying ideas around, or let me say above, the ascending trend line if you are looking at things from a long-term perspective. And of course, we want to be alert of the Fed chairman speech, which is coming in on this is the economic calendar. It's coming in on Wednesday, 5:30 p.m. UTC, and of course the retail sales data coming up on Wednesday, 12:30 p.m. UTC. Any hawkish surprises could cause short-term pullback. So if the Fed chairman becomes hawkish in his outlook, or the retail sales data comes in higher than expected, we may likely see a drop in the gold commodity. So if you look at the bottom of your screen, you will see that I actually sold the gold commodity within this old structure here, and the reason is simply this. When I scaled down into the 15 minutes time frame, I saw a setup that looks promising. Hold on a second, I'll share that with you in a moment. So right here on the 15 minutes time frame. So this is what I saw here on the 15 minutes time frame after considering what's happened since the week began. So I have this trend line here. So we can see some signs that buyers are pushing price higher, right? then you will see also that buyers are finding it difficult to find higher highs. As you can see, we have a trend line. So we have what looks like a consolidation phase. And this is, so it was wide here and it continues to contract and contract and contract to form something that looks like a triangular pattern. And whenever we have this kind of triangular structure, it's the when it explodes, that is when price breaks out of the triangle, it usually moves very, very fast and very, very far. Now, the direction it breaks out is what we don't know, and we're beginning to see signs that the breakout is looking to the downside. As you can see here, look at the breakdown of structure, price comes back to retest, and that was the reason that made me sell this area. So it's more like looking out for selling ideas on a lower time frame. So from a long-term perspective, we are not in a trade, but from a short-term perspective, we are in a sell. We don't know how far that is going to go. So in fact, I want to be moving my stop losses right now to secure this profit here. So I want to be moving my stop loss to break even because we don't know what will happen next. So I would move my stop loss right away to 3,223.700 area. So I just did that right away, as you can see at the bottom of your screen. So I maintain a short-term sell around this area, and if price goes ahead to break down the $3,019.50 level just right here, we can add more sell positions to our existing trade. So let me just put that right there, $3,219.50 level. So let's look to sell that breakdown, retest the structure. I will be updating the structure as soon as the session ends on my Telegram and TradingView platform. So I sold the first one here, and then hopefully if price goes ahead to break down this lowest point, I will be adding one more sell position. So that is what I'm looking at on the XAUUSD from a short-term perspective. So if you're a day trader, you're a scalper, this is one structure you want to be using to navigate this market today. All right. But as a swing trader, a long-term approach, we still maintain a bullish bias. Like I said earlier, the fundamental factors are all in favor of the gold commodity, thanks to the weakening of the US dollar, rate cut expectations in the US, soft US inflation data in the US Treasury bond yield is dropping. Gold is a very beautiful asset to edge any inflation or any uncertainty around this market, hereby supporting that upward trajectory. So that is what I'm looking at on a long-term perspective. We maintain a bullish bias. I will continue to monitor price action around this area. If it so happens that that trend line we see on the 15 minutes time frame, that is the descending trend line, is breached and broken to the upside, that is price breaks out of this trend line to the upside, this will shift the momentum to the upside. So that is what I will be looking at to buy at the moment. So let's see what happens. If you sold, please move your stop losses, secure the current sell positions while we continue to monitor price action around this particular area. So this is my simple view on the XAUUSD. I hope I made myself very, very clear. But if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off to see if there are any questions before we start rounding off on today's Forex Morning Mastery. And of course, for those of you who had clicked on the like button, thank you very much for the support. I really do appreciate this from the bottom of my heart. It continues to inspire me to do more of this, and of course it also helps the community to grow. So the more likes we have, the higher the chances that the YouTube algorithm will push this video to a wider audience of traders who may find this content beneficial to them. So if you are yet to click on that like button, please do right away click on that like button, and thank you very, very much as you do so. So let's see if there are any questions before we go ahead to round off on today's Forex Morning Mastery. See you soon. Alright, so in the absence of no questions, I want to assume that we are all on the same page, and it's on this note we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys. I really appreciate your support and your presence, and hopefully this week is going to be a beautiful one for us as it did for last week. So today we were able to take on the 3 financial instruments on our watch list, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, all of which we were able to identify simple trading setups that we are going to be using to navigate this market today. So I hope you all marked out the structures accordingly on your chart. If you have done so, well done, kudos to you. So all we need to do right now is exercise patience and let's allow the structures to mature. I will definitely be updating us on both my TradingView and Telegram platform as the day goes by, as new setups evolve on the chart. And for those who joined us for the first time today, I hope you are able to gain a couple of things during the course of the session. If you did, you want to be part of our subsequent editions, trust me, the more time you spend with us, the better you get to comprehend my analytical approach. So I look forward to seeing you same time on Wednesday, 8:30 a.m. UTC, 9:30 a.m. West African time, as we come here again to review how well these assets have done and of course prepare ourselves for the second half of the week. Do have a wonderful evening, everyone. Bye.